It's Fed Day. That's our topic for this morning's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. We're going to jump right into the bond market first thing this morning, and bonds are the happiest that they've been all week long. Mortgage bonds are up about 16 basis points right now. They're down from their highs. They were actually up about 34 basis points a little while ago. The 10-year yield is down 8 basis points right now. And a lot of this is coming off of really some news. There was a surprise meeting from the ECB, the European Central Bank, to discuss the bond rout that's been happening over the last couple of days. And so that surprise meeting has kind of been a boon for the bond market. So what that means for mortgage interest rates today, it means mortgage interest rates probably opened a little bit better than where they ended yesterday. But remember, it's Fed Day. So today we're going to have the Fed statement that's going to be released following their two-day meeting. That's set to be released at 2 p.m. Eastern time today. And it's going to be followed by a press conference with Fed Chairman Jerome Powell. Now, this news, whatever the Fed decides to do as far as their interest rate hikes and all the other things that they discuss, are going to be very, very closely watched, and it will move the market one way or the other. The market will move. So the question is, what's going to happen? What are they going to announce? How is the market going to respond? So we're definitely in reprice territory today. Could be for the better, could be for the worse. And look, there's a lot of pressure on the Fed right now. There's pressure from politicians, there's pressure from Congress, there's pressure from Wall Street. There's a lot of pressure on the Fed to take some action here, and we'll see what they decide and how they respond to that pressure, and then we'll see how the markets respond in turn. Now, I want to jump into some data real quick and talk about the data from Mortgage Bankers Association. So, Mortgage Bankers Association released their mortgage application data for the week ending in June 10th that showed that overall application data, or applications, were up 6.6%, but they're down 52.7% from a year ago. Purchase applications were up 8.1%, but are down 16% year over year, and refinance applications increased by 3.7%, but are still down 76% year over year. Now, let's dig into this MBA data a little bit, and let's start with some data from Fannie Mae, actually, all right? So I want to take a look at the trend that we've seen for the last 3 years, including this year, in mortgage originations. We're going to look at this trend in volume by dollars, in trillions of dollars, all right? We're going to start with the Fannie Mae data that shows the forecast. I'm throwing it up on the screen right now. Fannie Mae shows that they're forecasted a total mortgage originations of $2.7 trillion in 2022. So let's look back at this for the last couple of years. According to Black Knight data, in 2020, mortgage originations hit a record high of $4.3 trillion, followed by another record high of $4.4 trillion originated in 2021. So what happened in 2020 and 2021? Well, the pandemic, we all know, right? The COVID-19 pandemic happened. And as a result of that COVID-19 pandemic, the Fed started to purchase what's called quantitative easing. They started to purchase treasuries and mortgage-backed securities. And whenever they started to purchase the mortgage-backed securities, supply and demand market, demand went up, price went up, and interest rates went down. We saw historically low interest rates for 2020 and 2021. Those historically low interest rates caused the biggest refi boom in as far as dollar volume ever in the history of the United States. And so it inflated the number of, the volume, the total volume in trillions of dollars over 2020 and 2021. But there's something else that also happened too, not just in refinances, but also in purchases. Purchases went up as well because we saw different scenarios. We saw work from home scenarios that all of a sudden people could work from anywhere. We saw people that were retiring, people that were migrating and moving from the north to the south and just moving from different, moving into different areas. And, even here in Florida, we saw a huge increase in the number of people moving to the state of Florida. So all of these things were the result of the pandemic and really lifted, not artificially because it happened, but lifted up what would not have normally happened in 2020 and 2021. So if we look at 2022 compared to 2021 and 2020, and we see a $2.7 trillion in origination, well, obviously that's down from 2020 and 2021. But wait, let's take one more step back and let's look at 2019. In 2019, we had $2.06 trillion in originations. And in January of 2020, before the pandemic really hit, the MBA, Mortgage Bankers Association, released their forecast for 2020, 2021, and 2022. Let's take a look at that. I'm going to throw that up on the screen right now. So if we look at this data and what they forecast, again, in 2019, we saw $2.06 trillion in originations. In 2020, they forecasted $1.9 trillion in originations. In 2021, they forecasted $1.7 trillion in originations. And in 2022, they forecasted $1.79 trillion in originations. If you look at the interest rates, in 2019, the average interest rate was 3.7%. They forecasted that to stay steady and go up to 4.1% by 2022. So let's reset here. 2020 and 2021 were obvious anomalies from unforeseen circumstances. So if we go back before those pre-pandemic unforeseen circumstances, 2019 compared to 2022, we are growing. That's right, we're growing from 2.06 trillion in origination to 2.7 trillion in origination. All right, so listen, we're still feeling the effects and reeling from the effects of the pandemic. And let's go ahead and throw in the war in Ukraine for a little extra salt on that, all right? So we're still feeling all these economic effects, and today, the Fed Day, is an important part of what's going on. But here's the deal. It's easy to focus on the negative. It's easy to focus on higher interest rates and high home prices and low affordability, but I want to focus on the positive. We are growing. And here's the deal. If you have your mind right, if you have a good attitude, a good mindset, you focus on the positive, work harder, work with integrity, we will grow and we will succeed. That's all the news that we have for today. Again, it's Fed Day, so we will definitely be bringing you news about what's going on with the Fed throughout the day to day, including any possibility for reprices. In addition to that, we'll talk more about the Fed decision and its effects in the market in tomorrow's Backstage Pass. Be sure to like, comment if you have any questions, subscribe to this channel so you can get these daily updates. And remember, stay positive, have a great day. We'll see you tomorrow.